Good morning friends, today it's 15th of April 2025 and the technical outlook for Nifty and Bank Nifty futures for intraday and short-term time frame is as follows. So we have seen that the time and price correction which has started from September 2024 from the highs of 26402 levels has recently made the lows of 21860, that is almost 17% down from the highs in last 7 months. And broadly the index has been now in a consolidation zone between 22,000 24,000 mark almost since last couple of months. And even last week though it made a swing low of 21,860, but it bounced back sharply from the lows and ended the week at 22,918, down 0.18%. So technically, as per the price study, Nifty futures holding over and above 22,400 and 22,000 mark on a short-term time frame holds buy on dip outlook, while the potential target come resistance on the higher end will be first 23,250 23,500 zone, followed by the next major hurdle of 24,250, below which the midterm trend remains range to down. The oscillators are indicating a hedged long outlook on dips. They are turning positive compared to what it was earlier, and thus contra long can be looked on dips, keeping a strict stop losses. For the day today, we can expect Nifty futures to consolidate within a range of 22,750 23,290. Gap up opening will be expected on the back of positive global cues, and it is expected to encounter with the resistance at around 23,250 23,500 zone. So for intraday, dips towards 22,820 and 22,620. These are the buy levels, maintaining a stop of 50 odd points. One can look for going long, and intraday shorts can be looked at around 23,280 or at around 23,420, keeping a stop of 50 odd points. As per the weekly OI data for Nifty, it indicates that 21,000 24,000 as a maximum range. If we talk about Bank Nifty futures, which ended last week at 51,162, since it has formed a bullish engulfing candle on a monthly time frame in March 2025, the bias mentioned was buy on dip, and we have seen that it has witnessed a decent pullback from the lows. On a short-term time frame basis, 52,000 and followed by 53,000. These are important targets come resistances of this pullback. The bias will remain buy on dip till the time it is trading over and above 50,000 49,500 zone. So overall, the bias remains buy on dip over and above 50,000 49,500, expecting a target of 52,000 and extended target of 53,000, which need to be held on a weekly time frame in order to nullify the ongoing pessimism and negative outlook over the index. As per the monthly OI data for Bank Nifty, the maximum call build-up is at around 53,000 strike, and the maximum put build-up is at 50,000 strike. So that's the broad range for the monthly expiry as of now. For intraday trading players, 51,100 and 50,800. These are the support levels, while 51,680 and 52,000 level can be looked as a resistance come intraday targets, which can be looked for contra trading short bets. So net we are expecting that the follow-up of pullback which we have seen in last week should continue till the time we doesn't see any kind of reversal signals, because there are a number of positive indicators too amid this global turmoil, which is beneficial for the Indian market as a whole, and we can see in the price study also. So the broaderly we have seen the advanced decline ratio has been good. Counter specific accumulation for the midterm time frame in the market has been witnessed in last few weeks now, and we believe that post this ongoing turmoil, sooner or later the market should stabilize, maybe by the end of this June series, and thereafter it should be open for a higher highs kind of scenario. So as of now, look, be selective and avoid leverage positions because the volatility is still high. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.